Most people think keeping gold in a bank locker is 100% safe and insured. But the reality is, your locker does not fully protect your gold. Not from theft, not from fire, and definitely not from legal loopholes. In India, gold is more than just a metal. It's emotion. It's family security. It's a legacy. So naturally, our first instinct is, if it's valuable, put it in a bank locker. The bank feels trusted, secure, and protected, right? Well, that's only half the story. For years, banks had a very simple stance. If something happens to your locker, they are not liable. Not for theft, not for fire, not for any loss. Most customers never knew this because it was buried deep within the terms and conditions of their locker agreements. It was a shocking but common practice. Then, in 2021, the Supreme Court of India stepped in. In a landmark case, the court called this out and declared that banks must take responsibility for the security of their lockers. This was great news, but here's the catch. The court only said banks must exercise reasonable care. It never said banks have to fully insure your gold or compensate you for its entire value if something goes wrong. This is a critical detail most people miss. So what do banks actually offer? They provide physical security with restricted access, CCTV surveillance, a dual key system, and regular audit checks. They do a lot to prevent unauthorized access. But what they don't do is guarantee the value of what's inside. In fact, legally they are not even allowed to ask you what you're storing in there. Your locker's contents are your private property, and the bank is just providing a secure box. This leads to the biggest misunderstanding. People assume that because their gold is in a bank locker, the bank is fully responsible for it. But the reality is, if anything happens, the bank may only compensate you up to a limited amount, which is often far lower than the actual value of your gold. For example, if you kept jewelry worth 20 lakh rupees in a locker and it was lost due to a fire or burglary, the compensation might only be a few lakhs at best. Sometimes it's just a refund of your locker rent. The compensation is a token amount, not a replacement of value. So, what can really go wrong? The risks are very real. We're talking about a fire in the branch, a major burglary, or a natural disaster. There are also disputes over missing locker contents, complications during bank mergers, and even cases of forged access. If you think this is all theoretical, just a quick search will show you that locker disputes happen regularly across India. And here's another critical point. The gold in your locker is not automatically insured. Not by the bank, not by the RBI, and not by any government policy. A bank locker is simply a storage service, not an insurance product. If you want your gold to be insured, you have to buy that insurance separately. This involves declaring the items, getting them valued, and updating the policy periodically. Very few people actually do this. So what should you do if you use a bank locker? First, keep a detailed inventory. Take photos of your jewelry and get a valuation report. Second, seriously consider buying separate locker content insurance. Third, only keep items in the locker that you don't need to access frequently. It's also smart to spread your risk, maybe keep some at home, some in the locker, and consider digital gold for your investments to eliminate physical risk entirely. At the end of the day, a bank locker is definitely safer than your cupboard at home, but it doesn't remove all the risks. The locker gives you security, but it does not give you a guarantee. Now I want to hear from you. Comment below. Do you keep your gold at home or in a locker? And if you want a detailed video on gold insurance or maybe a comparison of sovereign gold bonds versus physical gold, let me know. I'll make it happen. Thanks for watching.